I talked about now you need to know that the market moves in structures from zone to zone. So when it's going up, it should be forming higher high. I told you this is high, this is a higher high, this is a higher high. No, so what that means is this high is higher than this high, and this high is higher than this high, this high is higher than this high, so it's a higher high, it's higher. Do you get now? So this one is a higher high, and this one is a higher high. So when it gets here now, you see the market now, instead of when it comes down, it's supposed to now go up to form a higher high that will be higher than this previous high, but now it refused to form a higher high. Instead, it started declining and started coming down. So now how do you know if there is a break of structure? Is when, so now the previous one here, the previous how will I put it now? So now one thing you need to know is that until a higher high is formed above this one, this previous lower low is not valid. So you can't call this a break of structure. You can only call it a complex pullback. So this one that is coming down now is a complex pullback until this one is taken out. So which means if the market comes below this one and comes somewhere here, then there's a break of structure. But what we have here now is a complex pullback, not a break of structure yet. Now look at what is now happening. So the market comes down here. It didn't take this one out, it goes up, but it came down. Now it has taken this one out. Now I told you that this one is not valid until a higher high is above this one. So now it has taken this one out, it came here, it went up. So now instead of coming down and taking this previous low out, it now formed a double bottom. So here is the double bottom now. It formed an equilibrium level whereby it refused to take this low out. When it went up and came down, it went up, it did not take this one out, so it didn't come as down as that. So instead it's now formed another okay, initially here it formed a bearish pattern, this small green and long red candle. This is a bearish pattern, but this bearish pattern now has been taken out by this wick that we see here now, and we now have a bullish block pattern now with this red plus and green. So this now is a bullish pattern now. So now what I wanted you to see is the market is in a point of indecision. What do I mean by that? Now when it's forming bearish order blocks, so this is a bearish order block, this order block is what started the down movement. This small green candle and long red candle, these are an engulfing pattern that started the downward movement. Then it went up, it formed another order block here. It forms another order block here now that brought this market, went up. Now it now form another order block here, this green and red, but this green and red now has been cancelled by this wick. This wick is longer than the base of this order block, so this one is no longer valid again. So now before we can now, so now the market refused to make a higher high and it refused to make a lower low. Do you understand it now? It refused to make a higher high. Now this is a higher high. So when the market is going up, it came down, it went up higher than where the hill it has formed before. Do you understand now? Then it came down again. So now it went up higher than the hill it has formed before in this place. So now when it's coming down, to it came down, it went up, it came down, it went up. So as it's coming down again, it's supposed to come more than this previous low that it has made here, but instead it refused to go there. It's formed a double bottom here. So now we don't know if it wants to go up or it wants to come down, but it has formed a bearish pattern here. So what you now do is to mark it. So let's go on 8 hours. You see what I'm saying clearly? So this is what I'm saying. The market came down, it went up, it came down, it went up, it came down, it went up, it came down, but it refused to come lower than this previous down. Instead, they stop at the same place. Then it went up, it refused to now form a higher high below this previous high. It's supposed to stop somewhere here, but it refused to stop there. It stops here. So now we don't know if he wants to reverse or if he wants to continue, but what you now do is to just mark it. So all through, you notice that all through when it was going down, it refused to close above this moving average. So you mark it like this. So you mark it like that. Then this one that is beginning to form down here, you mark it also. Okay, so until it closes below this level before you can enter a sell, and if you close above this you can enter a buy. But in case of a breakout, if there's a fake out, rather, if there's a fake out means it will deceive you like it's going down. So if there's a fake out, it will break below, then it will not start going up, or it will break above and start coming down. Let me give you examples of some breakouts. So this is a fake out. This is an example of a fake out. It broke below this place, so a lot of people would have entered sell, then now start going up. So there's nothing we can do. That's the way the market is formed. Sometimes it fakes you out and you hit a loss. So all you can do is to draw a line above it like this, and you draw another line below it like this. So if you had drawn a line like this from the beginning, before this fake out happens here, or before this was started the fake out, before this fake out happens here, if you had drawn a line like this below it, so you will not just wait for a break of moving average, you also wait for a break of trend line, and now there's no break of trend line, so you might not be faked out in this particular case. So when this one now happens, you just follow it. So that's why, apart from moving average, so look at this place now, the moving average is down, so the moving average can easily be faked out. But even if the moving average is faked out, there's another trend line here. So when there's a break of both together, then you can enter a buy, and provided that other block has formed. So you will see another block. I told you the market doesn't move except it forms another block. So if he really wants to go up, it will form another block. So, and if he wants to come down, it will form another block. So but whichever way, there's room for being faked out, but you cannot be faked out more than once or twice depending on your setup and the moving average you use. So right now I'm using the smooth moving average. Let me show you. So this is the smoothened I don't know how to pronounce this. Is it smoothened or smooth moving average? You know, when you open like this, you have simple, exponential, smooth. So I'm using the smooth on 14 period. Then I also have a red one, smooth, also on 200 period moving average. So here's a 200 smooth, set to smooth. Okay, so that's what I'm using now. So let's see how it goes. So we mark this and we wait for what happens. But on a daily time frame, this has formed. So two things can happen here based on what we see on the weekly. Now on the weekly time frame, we're already entering a what's it called, a bullish trend, but overall we're still in a downtrend because of this 200 period moving average. So until it breaks above this 200 period moving average before we enter an uptrend. But right now it looks like a pullback from this previous downtrend, like is this a correction? It looks like a correction from this period, this one, and maybe it's a reversal, we don't know. So let's see what happens. Maybe the market can just bounce here and keep going up, which I think is what it wants to do. Maybe we can just based on this place and continue its upward movement, or it wants to start coming down and continue its downwards movement. So whichever way it is, all we need to do is to just get ready for whatever it wants to do. So what I wanted you to see here was that the market refused to break structure below and refused to break structure above. So you mark it like this and you wait for it and see what will happen tomorrow. So I quit my position. I told you to enter buy, but now I had to quit my position, and I just made like $2. And the market has already entered like $30. My trade has already entered like $30 before, but I was waiting for it to go up more, at least to come to this up place, but it didn't get there. So I just had to quit and I got out of the market. So that's all for now. I hope this helps you. So that's majorly how to trade, majorly. So you were in one trade before in Euro USD. It's still in minus, right? So I want you to leave it. So what you were complaining about, that you couldn't move that in, you look at my cursor. You bring the cursor, go and buy a mouse, you bring the cursor down, be touching the lines one after the other. You see the first line here, the arrow did not change. By the time you get to the second line, the arrow has changed. Do you see? Let me do it again. The arrow changed. It can be anywhere on the line, on this line like this. So but when you get here, you see the arrow changed. When the arrow changed, that's when you click it down and you drag it up. You see your price, you see your balance here, and when I'm going up, you see it changed again. When it got to that line, it changed. But if you are here, you are trying to drag it, it will not go. If you are trying to drag it here, it will not go. If you are trying to drag it here, it will not go. You know, all these places will not go until when it gets to this place. Now when it changes to upward arrow, then you can drag it down or drag it up. So try it. So maybe you should just get a mouse. Alright, I'll see you later. So we've not been having classes, so we're in holiday period. So let me know when you're ready for me, sha.